Secretary Reich, let me just ask you to talk a little bit about the connection between those Trump tax cuts and ongoing stock buybacks. So, Secretary Reich, if you could start by just talking about what the incentives from that bill, what created and what we're still living with.
Yes, Senator. We were promised, the American public was promised, you recall, before the Trump tax cuts, that everybody would get a raise, a wage raise, and that there would be a huge new round of investments in America. Neither of those came to pass. Instead, corporations used the money that they otherwise would have spent, otherwise would have been taxed. The revenues they actually spent on corporate buybacks. I think it's important to understand that stock buybacks do not generate more productivity in the economy. There is no trickle down from a stock buyback. When corporations use their record profits, as they're doing right now, to buy back their own shares of stock, what they're doing is delivering higher returns to their shareholders because buybacks reduce a company's shares outstanding, pushing its profit per share figure higher. They hit a new record last year. They're on the way to hitting an even larger record this year. It helps the share price, but it amounts to a redistribution from workers and consumers to shareholders. Because in an inflationary environment as we are in right now, when highly profitable companies are using their profits to buy back shares and they are raising their prices at the same time, what happens is consumers pay more. Workers, even if they've got a raise, are losing those raises because they're losing them to inflation. And shareholders do better. But as we all know, most shareholders, half of this stock market is owned by the top 1% of Americans by income, and 84% is owned by the top 10% of Americans by income. This is how you get the redistribution upward.